All right, hey there students. So in this video today, I'm going to go over property disposition. Now what does that mean? It's when you dispose of a property. Now you can dispose of it either by just getting rid of it or selling it. So as you see here, disposing of property. Now, when you dispose that property, usually you remove it from the books due to obsolescence. What does that mean? Well, that means that property has become obsolete. Now, technology may have advanced, so you need to upgrade it, or you just need to get rid of it, get it off the books. So it becomes obsolete, so you need to dispose of it. Must take everything that's associated with that property, right, like a piece of equipment, take it off the books, remove it. 1, get rid of accumulated depreciation. 2, get rid of the cost of the asset. And 3, record a gain or a loss when you get rid of it. So let me show you what I mean here. So let me show you a little example here. Let's say you go and dispose of a property. It's a piece of machinery. You need to remove it from the books. It's obsolete. It's no longer useful. That machinery had a $100,000 cost. And the accumulated depreciation was 78 grand, so it's depreciated a lot here. Now what you're going to do, you're going to debit that accumulated depreciation. Why do you do that? Well, remember the natural balance of accumulated depreciation is a credit, right, when it goes up. So to get rid of it, you do the opposite, right? You go ahead and debit it to remove it from the books. You got to get it off the books. Then you would credit equipment for the 100 grand, right? For the original cost, get it off the books. Because it's normally a debit, right? So to remove it, you have to credit it. So what's the difference here? Notice, these numbers are not equal. Debits don't equal credits, but they have to, right? That's Journal Entries 101. They have to equal each other. So you would debit loss on disposition because you're losing money, right? Because you're getting rid of it before you fully used it up. So you have to debit what they call a loss on disposition for the difference, 22 grand. How'd I get that? I took the cost of equipment minus the accumulated depreciation. So what's really happening here, why it's called a loss, is because you didn't fully use that equipment, right? It wasn't down to zero. So you're losing the remaining life of it, if you will, for 22 grand. So that's a disposition there. Now what happens if you sell a piece of equipment? What goes down? Let's see. So let's say you sell that property, you sell it to the highest bidder. You must take everything off the books once again. Same as disposition. Take out your accumulated depreciation, take out the cost of the asset. Then you record the cash, right, because you sold it. So they're giving you cash for it. Then you record that gain or that loss. So let me show you an example here. This will make a lot more sense. So you sell that machinery for 125 grand, right? The cost was 100 grand though, what you originally got it for. Accumulated depreciation was only 15 grand, not a lot. So how do we get rid of this? Well, you debit the cash, right, for 125 because you sold it. So that person's going to give you some cash for that equipment. So cash goes up. That's good. Then you debit accumulated depreciation. Same concept. Normally AD is credited. So to remove it from the books, you do the opposite, which is a debit. Get rid of that 15 grand. Then you credit equipment for the 100 grand. So there's definitely a difference here between debits and credits. So what do? Well, you credit a gain because you made some money off of it. Let's think about it. You got cash for 125. You debited your AD for 15 and the equipment only cost 100. So you actually made a gain on it. You made profit, if you will, off of that sale. So that's the basic journal entry there. Now, if you're still a little confused on it, that's okay. We're going to practice a lot of test questions like we usually do. But once again, to calculate a gain, you take the selling price and you compare it to your book value. That's it. So if your selling price, $125,000, is greater than the book value, which in this example, the book value, cost minus AD, so the book value is $85,000, right? You got $125,000 for it. So subtract those two, and you get a gain of 40 grand. Now, if your selling price is less than what they gave you in cash, that would be a loss. Simple as that. So please pause the video, rewind it if you need to. Do your own calculations to make sure it makes sense to you. Then next, we'll practice some test questions and get you really prepped for those exams. Going through property disposition and then selling a property and recording a gain or a loss. So hopefully that was helpful. Hopefully you took some notes. And thanks for watching. I'll see you in the next video.